I'm going to explain how I turned $31 into $1,036 to show you that with the right trading strategy, anything is possible. If you have a small trading capital, watch this video closely because I'm sharing my best day trading strategy with you in full. The higher time frame, even if it's a day trading or scalping strategy, allows you to confirm that the financial asset is truly in either an uptrend or a downtrend. Here, Bitcoin is in a strong uptrend. You can see a period of stagnation all along here. You can see it here with several touches on the trend line. You can see that yesterday the market came to test the trend line again, and for now, it hasn't managed to break through it. So, you have several pieces of information on the 4-hour chart here. You have the downward trend line that's keeping prices in a correction for now. Let me remind you that in an uptrend, what we're looking for in the financial markets is buying opportunities, even if it's scalping or day trading. If the 4-hour trend is bullish, we look for buys and avoid going against the trend because that's not profitable and it's way too risky. I always encourage you to follow the trend. You can also see that there's a large gray price zone that acted as support for quite some time. The market bounced off this support every time it came to test it until the moment when the support was broken to the downside. As you can see, the market settled below the support, which then became resistance. The market once again pushed prices down before finally, yesterday, breaking through this resistance so that it became support again. You can also see that this price zone, this support area, is exactly at the 50% Fibonacci retracement level. Fibonacci is very simple. I took the last low point of the upward trend up to the high point, roughly here, and you can see that the 50% Fibonacci support is exactly on the technical support on the chart. That gives even more weight to this price zone, even more strength to this price zone, so you can rely on it with confidence when it is broken in one direction or the other to make buy or sell decisions. Here, we're going to make buying decisions. Let me remind you, because here on the 4-hour chart, we got the first confirmation that the market was turning upward again. You can actually see it since the break of the support here. The market set up a double bottom, and with this chart pattern, it gives us additional information that the market is starting to move upward again. You can also see that the candlesticks are showing bullish price action because the lows are getting higher and the highs are also getting higher. You can see it on the 4-hour chart. There are a lot of bullish signals, which is why I started buying this market. I started buying during the very impulsive bullish 4-hour candle that you see here, and to do that, I went down to the 15-minute chart to get a lot more signals and also to anticipate more. Because if you stayed on the 4-hour chart, you would have only entered at the close of the 4-hour candle, and in the end, you wouldn't have had many pips to catch on the buy side. That's why we're going to use several time frames to get the overall sentiment from the higher time frame, and then, based on that sentiment, we'll move down to a lower time frame like the 15-minute chart to really set up the trading strategy and enter the buy position precisely. We're on the 15-minute chart now, and as you can see, we have a lot more information. The huge support I showed you on the 4-hour chart is here in gray, and you can also see the breakout of this price zone here, which leads to a strong move back up for buying. You can see that while we only had a single 4-hour candle before for the breakout, here we have 3 on the 15-minute chart, which allows us to enter the trade much earlier. I'm going to explain everything to you now, and actually, the signals really start to appear from this point on. We'll be able to use technical analysis to spot chart patterns, to identify very precise breakouts, and to enter positions very early, just like I did with the small trading account to take it from $30 to $1,000. Before I talk to you about the signals, how I set my stop losses, and how I add it to my positions, I'm first going to quickly talk about the price action you can see on the 15-minute chart, which, once again, is very bullish from that point on. As you can see, we have a low point here. The next low point is higher than the previous one. And finally, the third low, with a wick here, is higher than the previous one. We have the beginning of a bullish trend in the price action. The highs are also getting higher and higher, as you can see. It's just analysis. It's just about being observant and looking at the basic market information that will allow you to make money. There's no need to clutter your mind with lots of technical indicators or overly complicated trading strategies. Everything is right there on your chart. The candlesticks give you all the information you need. Look here, we have this channel forming, and we can also mark out a very important price zone. We can even extend it further back in the past, you have a lot of market touch points on this price zone, and you can see that every time it was broken, whether down here, or up here, it was violent and volatile. So this is a price zone that needed to be watched in order to start buying this market. You have your first very impulsive signal here, because you break through the resistance zone strongly here, which now becomes support, and previously you had this bullish price action, the definition of an uptrend with higher lows and higher highs. These two very simple pieces of information allow you to enter a position. Also, the bullish breakout candle is almost a Maribozu candle, which is huge and impulsive. A lot of buying money was injected into this move. So you can follow the trend with peace of mind. Now, what we're going to do for more safety is not buy here, but wait for the market to give us other signals. This resistance zone that has become support, look at how well it plays its role here when I start to get really interested in buying. As you can see, we had the bullish breakout, the perfect retest within a chart pattern, and the real buy signal will come in right here. As you can see, is a pretty sharp move for day trading, which will allow you to make money. I placed the first buys here because everything I just explained lines up with the bullish trend. To set your stop loss, it's simple. If you enter at the breakout of the trend line here, you place your stop loss within the chart pattern so that if the market hits your stop loss, it's most likely a false breakout and there's a good chance it will drop further afterwards. And for your targets, it's the previous high of the market. The previous high of the market is right here. We'll mark out a precise zone, and as you can see, you have your take profit. So the risk-reward ratio is excellent. If you had waited for the 4-hour closing candle and only used the 4-hour chart for your technical analysis, you would have started buying at that point. You would have probably caught this drop, unfortunately, and it wouldn't have been as profitable as getting in as early as possible at the start of the trend. Speaking of this price zone here, as you can see, the market simply gave a second very interesting buying opportunity. Once we had the upward movement, the market set up a range, and you can see that this range led to a bearish retest on the former resistance zone, which became a support. With this bounce, it clearly confirms that the market now considers this price zone as a support. If you place the Fibonacci from the start of the upward movement to the high point, you can see that the market will come to correct between the 50% and 68% Fibonacci retracement levels. Finally, in this bullish trend, you had a third strong buying opportunity. Once again, after the market stabilized, a chart pattern formed and you had a breakout here. You can enter a position at the close of the 15-minute candle, set your stop loss just below the 15-minute candles here, and once again take advantage of this upward movement. You can see that since then, the market has started another downward correction. That's completely normal. Within a trend, the market will always make upward and downward moves, up then down, up then down, up then down. But overall, the market keeps going up, and your role is to try to buy each time there's a correction or when there's a breakout above resistance. Both approaches are possible and profitable as long as you know what you're doing, as long as you're patient, and as long as you have the right trading strategy to trade this way.